welcome back. This is part 3 of chapter 1, and in this I'm going to be talking about pages 21 through 23. I'm going to actually start talking about financial statements and those statements that a company issues to both internal and external users to convey their financial position. In this class, we're going to talk about 3 of those 4 financial statements: income statement, statement of retained earnings, and a balance sheet. We don't really go into statement of cash flows in this class. That's the next class. And I know you're thinking this stuff is about as clear as mud right now, but I promise if you will read the information, watch these videos, work through the homework, and then start working through the quizzes, and I'll give you more information about the quiz later in the week for chapter 1. But it's just really important that this stuff will kind of clear up as the semester goes on. If you have specific questions, please call me, text me, email me, and we'll talk about it. But I think you'll find that somewhere around chapter 3, if you'll just keep working and hang with this, or somewhere around chapter 3, you'll go, oh yeah, this is kind of making sense now. These first couple of chapters, this is new information for a lot of you, and like I said, it's going to be about as clear as mud, but you'll figure it out. Okay, 3 financial statements we're going to talk about. The first one is the income statement, and that is revenue minus expenses equals net income. You know what? I'm going to write this down at the bottom here. Sorry, I should have had a blank slide here to put this up for you, but I'm learning to use this too. So income statement equals revenue minus expenses equals net income. So in a little bit here, I'm going to do an income statement for you, and this is all that's on that income statement. Revenue minus expenses equals net income unless the expenses are greater than revenue, and then you have a net loss. So when I say prepare a financial statement, prepare an income statement, all you're going to do is list the revenues, you're going to list the expenses, you're going to subtract the expenses from the revenue, and you're going to come up with the net income or net loss. That's pretty easy. It seems confusing when I say, oh, prepare financial statements, but if you'll keep in mind that all an income statement is revenue minus expenses equal net income or profit, or net loss if they had more expenses than revenue. Second, the statement of retained earnings just explains the changes in owner's equity. So what we're going to do with the statement of retained earnings, we're going to say, what was the beginning balance? That comes from the end of last year's. We're going to add owner contributions. So any money the owners put in, we're going to subtract dividends. And we're going to add net income or net loss, which comes from the income statement. So we do our income statement first. We get the net income, net loss. When we move over to our statement of retained earnings, we start with the beginning balance, which is last year's ending balance. We add any money the owners contributed to it. We subtract any dividends we have paid out to the owner, and then we add the net income that the organization had for the year. All right, that's simple enough. You can do that. And then the third statement we're going to do is the balance sheet. The balance sheet is nothing other than the accounting equation. The balance sheet equals assets equals liabilities plus owner's equity. So when you get to the balance sheet, that's easy to remember because you have already memorized the accounting equation, and that's what is on the balance sheet. All right, let's look at some financial statements. I'm going to prepare some financial statements for you on this fancy, handy-dandy little board I have here. And let's see if we can get you started on those. Trust me, we're going to study them over and over again. So if you don't understand them this time, you'll understand them the 30th time I go through them with you. All right, let's do this need to know. So I want you to look carefully. I have it on a sheet here, and you may have to open it up in another sheet. You may want to print this PowerPoint off. We're showing, I want to walk through these with you because I want you to know what every one of these are. An accounts payable is a liability. Liabilities go on, let me sit down here. An accounts payable is a liability. Liabilities go on your balance sheet. Other liabilities, liability goes on your balance sheet. Cost of sales is an expense. That goes on the income statement. Cash is an asset. Assets go on your balance sheet. Retained earnings on September 29th, 2012 is your statement of retained earnings. That's owner's equity. Dividends paid in 2013, statement of retained earnings. Revenue is your income, so it goes on your income statement. Investments and other assets goes on your balance sheet. Land and equipment is an asset, it goes on your balance sheet. Selling and other expenses are expenses, so they go on your income statement. Accounts receivable is an asset, it's money people owe you, so it is an asset and it goes on your balance sheet. Net income is your revenue less your expenses. That will go on your, it will be on your income statement and then transfer over to your statement of retained earnings. We know what our retained earnings are. They go on our statement of retained earnings, and common stock goes on your, retained earnings goes on your balance sheet and common stock on your balance sheet. All right, let's work through these. Let me do a income statement for you. The company, first of all, we have to tell them who the company is. This tells us that the company is Apple Company. We need to tell them what this statement is. It's an income statement. And we have to tell them that this is for fiscal year ended. And the date is September 20th, 2013. Yes, September 28th, 2013. All right, our revenue, it told us, was $170,910. Our expenses were cost of sales, which were $119,724, and selling and other expenses is $14,149. So our total expenses our total expenses are $133,873. I just added these two numbers together. And our net income is $37,037. So all I did was subtract net income. I took our revenue, I subtracted our expenses, and our net income was $37,037. Remember, if our expenses had been greater than our revenue, this would be a net loss, but it's not. This year the company made more money than they lost. So I want you to keep this number in mind. I'm going to write it over here. $37,037 was our net income. Okay, so that's a pretty easy balance sheet to do. I'm sorry, income statement to do. And when you're doing these income statements, this one is a very simple one. We had one revenue line, two expense lines, but keep in mind that huge financial statements are this very same form. They're just a lot longer. All right, now we're going to move on and do our statement of retained earnings. This board is really hard to erase, so I apologize. It will take me a minute every time. Maybe I'll figure out how to get better at this. But at this point, you're just going to have to be patient with me. And I'll be patient with you until we get this sorted out. All right, now we're going to prepare the statement of returned earnings. Once again, we tell the user that this is Apple Company. Statement of retained earnings. For fiscal year ended September 28th. That's a weird ending date. They're usually the end of the month, but that's the date they give us. And in here, we know that it tells us our retained earnings was, as of September 29th, 2012, was 101 plus net income. Oh, remember where that number came from? Of 37,033 or 37,037. Remember that number? We add our net income. Less dividends because we paid money out to the owners. And the problem told us that amount. You will always be given amounts that you have to know. And it's a negative 34,070. So our retained earnings September 28th is 104,256,000. We took our retained earnings, we added net income that we took directly from our income statement, and we subtracted the dividends that were paid out to owners. So our retained earnings at year end were $104,256,000. I'm sorry, $104,256. All right, now I'm going to ask you to keep this number in mind because it's the one that we're going to carry forward to our So this is retained earnings So there's a method to carrying forward numbers on our financial statements. And now we're going to prepare the last financial statement that we're going to learn how to prepare in this class, a balance sheet. It's a statement of the company's position as of a particular date. It's a snapshot for this problem on September 28th, 2013. It's a snapshot of their financial position on that day. Whew. This is good. This is a good workout, erasing this board. All right. Now, I showed you how to title the other two financial statements, and I'm going to show you how to title this one. It's slightly different. It's still Apple Company. It's the balance sheet. Balance sheet as of September 28th, 2013. It is not for year ended. It is as of this date. All right. Your chart of account on the prior PowerPoint showed you what your assets were. Your cash is $14,259. Your accounts receivable, AR, is $13,102. Land and equipment is $16,597. And investments and other assets is $163,042. So your total assets is $207,000. Oh, I hope you can read that down there. Add those up and they equal 207. I promise next time to move it up to the top of the board. And our liabilities. Remember, the left side has to match the right side. So our accounts payable, I'm going to do AP for accounts payable, is $22,367. Our other liabilities is $61,084. Total liabilities is $83,451. Now our owner's equity, our common stock, which came from that prior PowerPoint, is $19,293. And our retained earnings is this number right here, $104,256, making our total equity $123,549 for a total liability and owner's equity of $207. So once again, we end up with our assets equaling our liabilities plus owner's equity. All right, that's all for today. I'll come back and do some more financial statements for you later in the week or next week, actually. And I promise to be neater, but I think this will give you a good start on what you're learning. Make sure you're getting in, reading and reviewing, doing your homework, and be sure and call me if you have any questions or concerns, or email me is probably best. Have a good week. Thank you.